Hello, you're joining me, Natalie MacDonald, for the first forecast programme of the new trading week. The New Zealand dollar rose to a one-month high against its US counterpart on Friday, following disappointing US data. Continuing this upward movement in Asian trading on this Monday, despite weaker than expected New Zealand retail sales data. Putting this pair under the microscope is Joel Kruger, principal and founder of FirstMacro. Joel, despite this upwards trajectory of late, you're seeing 0.81 over the one-month time frame. Walk us through this.
Yeah, the overall trajectory of the US dollar is still constructive in my view, and despite the recent Kiwi strength, technically we have been very well capped in the 83 to 85 area. And with the dollar starting to look stretched across the board, the risk for a bearish reversal back down to the recent base around 81 is compelling in my view.
This downwards correction is clearly a trend you foresee continuing into the midterm, with a 3-month forecast of 0.77. This is a figure not seen since July of last year. What correlation then do you see between the economic picture then and now?
Well, so back in July last year, the market started to price in the idea of a Fed taper, and then we saw a bit of a hiccup, and that derailed the prospect for a move in this direction. But we're back on track now as the Fed starts to taper, and once again have a market that's pricing in an expected narrowing of yield differentials in favor of the U.S. dollar, and I expect this will weigh on the New Zealand dollar going forward.
With the RBNZ expected to be the first central bank in the G10 space to start raising rates in 2014, some would consider this to be an indicator for a stronger Kiwi dollar this year. But you're seeing macro factors within the New Zealand economy as further weight on this pair, with a 12-month view to 0.73.
Yeah, I know it sounds a little bit, it might be a little bit crazy right now, but I see a New Zealand economy that has been suspiciously and uncomfortably immune to the rotation away from risk assets, and I think the currency should be no exception. So if we look back at the correlated currencies in the basket of the commodity block currencies, first in 2013 we saw Aussie well above 105, and people were sort of not expecting to see such a pullback, and yet it fell victim to the broader global macro themes. And then later in 2013 and more recently, the Canadian dollar started to fall victim as well and depreciate. So I don't see the New Zealand dollar as any different, especially when we're trading so close to cyclically elevated levels with the New Zealand dollar. So on a PPP basis, I think that the New Zealand dollar is still well overvalued, and there's room for the market to drop. And I think that as far as the interest rates are concerned, while we have seen an indication from the New Zealand central bank, from the RBNZ, that rates will potentially push higher, that picture we know could change very quickly if these external factors start to weigh more heavily on the local economy, and then we could see sort of a bit of a move away from a more aggressive tightening bias. So my view is still quite bearish on the New Zealand dollar going forward.
Joel, thank you for your comments. Are you bullish Kiwi dollar, US dollar, or do you think Joel's forecasts are on the money? Check into one of Dukascopy's community forums and have your say. But for now, it's goodbye from me.